Clint Peters, Remax Platinum here. We wanted to take just a moment today, and I got a good friend of mine, Heath Kirby with People's Bank with us today. He's going to talk to us a little bit about what's going on in the mortgage market. If it's anything like the real estate market in North Alabama right now, it's probably a little bit crazy. Heath, thanks for joining us today. How are things going in North Alabama as far as mortgages are concerned?
Thanks for having me, Clint. I appreciate it. As far as it goes, it's been an interesting time for all of us. During this time with everything shutting down, the mortgage business has kind of been like the healthcare business. We've increased with everything. We've seen rates that have been very, very low. I've been doing this since a little before the 2008 debacle, and we thought we'd never see something like that again. And we've been in a similar but different environment. Rates, for a while got below 3%. I would have thought I would never see a 2.75% 30-year again in my life, and we had that there for a while. That caused the floodgates to open, so to speak, and everybody started refinance if they weren't already buying a house, and that's just enormous increase kind of set the market on fire in lots of different ways, and investors got spooked, and then we saw rates go up. So we went from 2.75 to over 4% in a matter of days. And then, the hysteria started to die down, and we've seen rates trickle back down into where we're in the low threes on a 30-year again. I think, I've seen some 3%, some 3.125% 30-year rates. 15-year rates haven't really dove as much as we would expect just due to the uncertainty, but they're still, 3%, or you might see some 2.875, some 2.75s in isolated cases. So with that out there, it's been a great time to buy a house, number one, but to refinance a house as well. And a lot of people have taken advantage of it.
Yeah, it's hard to believe the rates are still, with everything going on, still that low. But with everything going on, kind of one of the buzzwords I guess you hear in the media these days is forbearance. Can you quickly kind of explain what that is, and maybe you're seeing that?
That obviously is there to help homeowners. For folks that have been laid off, it gives you an option to delay mortgage payments and keep you from getting behind and running into a foreclosure type situation. That also is what scared the market. The folks that ultimately buy the mortgage-backed securities that mortgages are sold into on the secondary market were terrified of that, because obviously that means their cash flow stops and can put some larger companies in a cash bind. So the forbearance, luckily I've not had too many folks that I've had to deal with, but as far as that goes, there are qualifications that you have to meet, and whoever is the servicer or the owner of your mortgage is going to have a process for that. So what I would tell folks is if that's something that they need to explore, to call their mortgage lender, and ultimately the company that owns it and sends them their bill each month, and say, this is my situation, this is what I'm dealing with, and they will have a process to walk you through that to make sure that everything's done the right way.
Well, good. Thanks for explaining that. I know that's probably what a lot of people are wondering, kind of what that is. I think that was a great explanation. On the flip side of that, you had a lot of people who were kind of in the middle of getting a mortgage when all this hit. Maybe they got furloughed or temporarily laid off. Once they get back to work, are they have to wait a certain amount of time before they can reapply for a loan? How does that work?
That's probably been the hardest thing in all of this, because obviously folks were going to work one day, and then one day they weren't, and it's not something that was any fault of their own. Obviously they didn't quit their jobs or decide to quit go, and their companies told them they couldn't come anymore, and that's been difficult, and each type of loan kind of has a different process for that. But we as lenders have to follow a federal law that was passed several years ago, that basically is called the ability to repay. And we have to make sure that we do the right thing when we're making a loan, that we don't put the borrower in a position where their income isn't sufficient to support it. That way, if they were to end up getting foreclosed upon down the road, it would be roughly our fault, and we would be liable for that. So we all, and anybody that's gone through the mortgage process, they know, as far as it goes, we look at that really closely to see your income coming in against the debts going out. And with the furloughed situation, that's one of the biggest things right before closing. We have to make sure, we have to see, is the borrower still working? Has their hours changed? Has their income changed? And if it did, they have to be qualified based on what they're getting now and not what it was. The different types of loan, obviously you have your government type loans, the FHAs, the VAs, and the USDAs. They have tougher guidelines than say a conventional. A conventional loan will have a little more leeway to say, okay, back on this date, I am going to be back full time. If your employer would confirm that, that's something that we can generally go off of and say, okay, based on what your employer is telling us, we can use your income this way. The government type loans aren't that lenient. They want to see a pay stub when you get back to make sure that the income's where it needs to be. And hopefully during that time, if they have lost some income, they still qualify based on the reduced amount. But if they don't, then unfortunately, we can't close a loan until we can guarantee that they can make that payment.
Is there a certain number of pay stubs that you need to see before you can finish off?
I'm dealing with an FHA loan right now where we have that same situation. And FHA as a process generally requires 30 days worth of pay stubs. Now, I'm not going to have that borrower be back for 30 days worth of pay stubs based on that. Obviously, those first 2 weeks are not going to show the full amount of hours, but the next one will. And at that point, we can go back to the employer and have that explained. We can get evidence that, yes, now they are full-time, and this is what we expect going forward. And then that's what we'll be able to use. So, generally a pay period back at full-time is what you're going to need on a government type.
Gotcha. Thanks. That's really helpful, hopefully, for the people out there. And now switching to a little bit more better news, hopefully good news, with the rates so low and, the economy going for the most part pretty well. You got some first-time home buyers looking to purchase a home. Any programs that People's Bank or you have that can help a first-time home buyer?
As far first-time home buyers go, there are programs out there that specify you have to be a first-time home buyer for. The one that I use a lot is a traditional conventional loan requires a 5% down payments. And obviously putting the minimum amount down, you're going to have mortgage insurance. Being a first-time home buyer, we can do it with a 3% down payments, and that mortgage insurance is reduced. And so, that keeps your payment a little bit lower, helps you afford a little more in house. There are some programs out there that don't necessarily require you to be a first-time home buyer, but then again, if they're good programs for first-time home buyers. In our area, USDA is available in a lot of places, and that's one of the best programs out there for a first-time home buyer, given that it allows 100% financing. And you will see places like our down payment assistant type things, such as in Decatur, there's the Decatur Home Program. With FHA, there's a down payment assistance program to where they can either have a program to where they can borrow that down payment, or such as the case of the Decatur Home Program, have a grant or things like that to use. So there are the programs out there, but then also, once again, there are some that don't require you to be that works just as well.
Have you seen a slowdown like in the processing of USDA loans or FHA loans with everything going on, or is it still running fairly?
USDA has always been a type I've had a love-hate relationship with. It's a wonderful program for the borrower, but as a realtor, it can be frustrating when you have to wait on turn times that consistently change. It's the only program out there really that we have to send someone else to approve after we approve it, and you kind of get held to their turn times. Alabama as a whole, their USDA was always kind of on the longer end of that turn time, and I don't know all the things that went to it other than just being understaffed. But USDA had a change here recently. So they went to a more centralized type of a processing. So it's not just the Alabama office doing it; they kind of all chip in, and their times got very reasonable. I mean, we were seeing one in 2 days. I've not had one in the last month, but the last I heard that they were just a couple of days as far as what it took. So that I don't know that they've not had slowdown since then, but the last I heard they were operating pretty quickly.
Good. And finally, we'll let you get back to your day job here. Appreciate you joining us. But one final question for you. As you know, this real estate market is kind of crazy. It's real competitive. You're seeing multiple offer situations kind of all over the place. As a lender, what can you do to help a buyer kind of put themselves in a better position as far as, competition-wise obviously you want to see them get pre-approved, get that process done. But after that, can they like maybe possibly get pre-underwritten, kind of things like that? What can they do to kind of put themselves at the top of the heap when it comes to multiple offers?
Yes, definitely. And what buyers need to realize is you have a pre-qualification and a pre-approval, and those are not the same thing. You know, it took me a lot of years to understand that myself, so I can understand why a buyer might not understand that. But a pre-qualification is something where your credit's been pulled, and probably that's the only thing that's been looked at. Not to say you haven't given some income documents, but not really required. It's just saying, you know, if somebody was to pre-approve on just on a website, obviously your credit's been pulled and you're given a figure for your income, and based on the information you've given, yes, you technically meet the guidelines. And so if you're given a pre-qualification letter, that's just what that says. And every realtor out there knows that pre-qualification letter is going to have so many, you know, asterisks and outs in there that it really, you know, doesn't mean a whole lot, because it gives the lender lots of ways out to say, well, you know, we still had to look at this, and we still had to, you know, have final underwriter approval and all those asterisks next to it. But a pre-approval itself, that is where, you know, someone has applied, their income documents have been received, it's gone through to an underwriter, and it's been looked at, and yes, they meet all the qualifications. And at that point, if a buyer knows they're going to be in the market in a certain amount of time, I would ask them to do that, or I would recommend that, because once that happens, now you just find a house. Your income's already checked, your assets are already checked. You just need an appraisal and title work at that point, and it's going to go quick. And appraisal and title work, roughly 2 weeks. I mean, you're closing. You'd be able to close in a 2 to 3 week time span if all the preliminary stuff was done. And you know as well as I do that no situation is perfect, and every deal has its challenges one way or another. And so to get the pre-approval, you've already gone through that, and you've seen any hurdles you've got to overcome. And if you've already worked on that, then you're going to be ready to go when you do find a house. And if you can go in as a realtor and write a contract with a 2 or 3 week turn time, that's going to look a lot more presentable to that seller than one that's asking for 45 days or 60 days or whatever, or don't have that letter to go with it. They have the letter that says, hey, maybe these folks are going to work out based on pulling their credit. So yeah, I would say if I was talking to someone that is looking and serious and knows they're going to do it, go ahead and get the hard stuff done first, and that way, it'll be a lot less stressful on everybody. I can promise once that's done.
Well, that's great information. Great explanation there between a pre-approval and a pre-qualification. That gets confused all the time, and
Definitely.
Today's competitive market, having that just a little bit extra advantage could really be the difference between getting that house you want and not getting it. Heath, I won't take up any more of your time. I appreciate you joining us today. Hope you have a great Thursday and a great weekend. Man, again, just thanks for joining us.
Yes, sir. Thank you for having me. Have a good day.
All right, man. Have a good day.